The SAT has its eye on transfers between family members. Recently, claims started circulating on social media that the SAT can fine you up to 30 or 35,000 pesos for transferring money to a family member. However, the reality is a bit more complex. To begin with, receiving money from a family member through a bank transfer does not automatically trigger taxes or fines. In fact, donations between direct family members, meaning parents, children, grandparents, grandchildren, or spouses, are exempt from paying taxes regardless of the amount transferred. In the case of siblings, uncles, or cousins, the money can also be tax-free as long as the total received during a year does not exceed 128,000 pesos. Now, just because a transfer is exempt from taxes doesn't mean there is no obligation to report it to the SAT. If during the same year you receive more than 600,000 pesos in loans or donations, you must report it in your annual tax return. If you don't do this, the SAT could consider that you hid income, determine the corresponding taxes, and in certain cases impose a fine that could reach between 30 and 35,000 pesos. In other words, the SAT doesn't fine you just for sending money to a family member. The problem arises when you receive amounts that must be reported and you don't comply with the corresponding tax obligations. If you have questions about how the SAT works, let me know in the comments.